China's economic transformation has been nothing short of remarkable. From a poor agrarian society just a few decades ago, China has emerged as a global economic powerhouse, home to over 1.4 billion people. Its rise has reshaped global trade, investment, and geopolitics. Understanding this transformation is crucial for comprehending the intricate web of global economic dependencies that China has come to define. China's economic ascent began in the late 1970s with the introduction of market-oriented reforms. These reforms unleashed a wave of entrepreneurial energy and foreign investment, propelling China's economy forward at an unprecedented pace. The country's vast population provided a seemingly endless supply of low-cost labor, making it the world's factory for everything from clothing to electronics. As China's economy grew, so too did its appetite for raw materials and energy. This insatiable demand transformed global commodity markets, with China becoming the world's largest consumer of everything from oil to copper to soybeans. Its voracious consumption fueled economic growth in resource-rich countries, binding their fortunes ever more closely to China's. Through initiatives like the Belt and Road, China has extended its economic influence globally, investing in infrastructure projects across Asia, Africa, and Europe. Chinese manufacturing has saved consumers worldwide billions of dollars, making goods more affordable. Without Chinese products, global markets would face severe shortages and prices would skyrocket, affecting everything from electronics to everyday household items. The world is deeply dependent on China, with over 20% of global manufacturing output coming from the country. This dependency underscores the critical role China plays in the global economy, making its economic policies and stability a matter of international concern. In 2021, China's GDP reached approximately $17.7 trillion, making it the second largest economy in the world. China's export budget in 2021 was around $3.36 trillion, while its import budget stood at $2.69 trillion. This trade surplus highlights China's significant role in global commerce and its impact on international trade dynamics. China's economic clout is perhaps most evident in its trade statistics. The country is now the world's largest trading nation, surpassing the United States in 2013. Its exports, once dominated by low-cost manufactured goods, have become increasingly sophisticated, encompassing everything from high-speed trains to solar panels. China's trade dominance extends beyond manufactured goods. It is also a major importer of agricultural products, energy, and raw materials. This dependence on foreign resources has made China a vital market for countries like Australia, Brazil, and Saudi Arabia. China's growing middle class, now numbering in the hundreds of millions, has become a magnet for foreign investment and a major driver of global consumer spending. Companies from around the world are eager to tap into this vast and increasingly affluent market, leading to a surge in foreign direct investment in China. In 2021, China's GDP reached approximately $14.7 trillion, making it the second largest economy in the world. The country's import and export budget exceeded $4.6 trillion, highlighting its pivotal role in global trade. China's role as the world's factory has created complex and deeply intertwined supply chains that span the globe. From smartphones to automobiles, a vast array of products rely on components manufactured in China. This reliance on Chinese manufacturing has become increasingly apparent in recent years, as disruptions to global supply chains caused by the COVID-19 pandemic have highlighted the world's dependence on China. The concentration of manufacturing in China has raised concerns about over-reliance and potential vulnerabilities. The pandemic exposed the fragility of global supply chains heavily reliant on a single country. It also underscored the need for diversification and resilience in the face of potential disruptions, whether caused by pandemics, natural disasters, or geopolitical tensions. Despite these concerns, China's dominance in manufacturing is likely to continue for the foreseeable future. The country has invested heavily in infrastructure, technology, and skilled labor, creating a manufacturing ecosystem that is difficult to replicate. Moreover, China's vast domestic market provides a powerful incentive for companies to maintain a strong manufacturing presence within its borders. In 2021, China's total import and export value reached approximately $6 trillion, reflecting its critical role in global trade. Additionally, China's GDP grew by 8.1% in 2021, underscoring its economic resilience and the importance of its manufacturing sector to the global economy. Section 4. Feeding the Dragon: China's Hunger for Resources. China's economic engine runs on a voracious appetite for raw materials and energy. As the world's most populous nation and second-largest economy, China's demand for resources has transformed global commodity markets. From oil and natural gas to copper and iron ore, China's insatiable hunger has driven up prices and reshaped the geopolitical landscape. It has secured long-term supply agreements for oil and gas from countries like Russia, Iran, and Venezuela. China has also invested heavily in mining projects in Africa, Latin America, and Central Asia to secure access to essential minerals and metals. This quest for resources has not been without controversy. China's growing presence in developing countries has raised concerns about environmental degradation, labor exploitation, and neocolonialism. Balancing its economic interests with its responsibilities as a global power will be a continuing challenge for China in the years to come. In 2022, China's import budget reached over $2.7 trillion, while its export budget surpassed $3.5 trillion, reflecting its massive trade volume. With a GDP of approximately $17.7 trillion, China remains a key player in the global economy, driving demand for resources worldwide. Section 5. The yuan's ascent: China's growing financial influence. China's economic might is increasingly reflected in its growing financial influence. The Chinese yuan, once a tightly controlled currency, is gradually internationalizing. China has been promoting the yuan's use in international trade and investment, seeking to reduce its reliance on the US dollar and establish the yuan as a major global reserve currency. The establishment of the Asian Infrastructure Investment Bank and the New Development Bank, led by China and other emerging economies, further reflects China's growing financial clout. These institutions provide an alternative to the Western-dominated World Bank and International Monetary Fund, offering developing countries greater access to capital and challenging the existing global financial order. China's growing financial influence has significant implications for the global economy. A more multipolar financial system, with the yuan playing a more prominent role, could reduce the dominance of the US dollar and lead to a more balanced and stable global financial system. However, it could also create new challenges and uncertainties as countries adjust to a changing global financial order. In 2022, China's import and export volume reached approximately $6 trillion, highlighting its critical role in global trade. China is the world's largest importer of energy, sourcing oil and natural gas from countries like Russia, Saudi Arabia, and Australia. In 2022, China spent over $300 billion on energy imports. This massive energy importation impacts global energy prices and supply chains, affecting economies worldwide. China's financial influence also intersects with military and security concerns, as its investments in critical infrastructure abroad can lead to geopolitical tensions. Politically, China's financial strategies often come with strings attached, influencing the domestic policies of recipient countries. Additionally, China's GDP has grown to over $17 trillion, making it the second-largest economy in the world. These figures underscore China's significant impact on the global economic landscape and its potential to reshape financial dynamics worldwide. Section 6. Of Future Intertwined Projections and Their Implications. China's economic rise is projected to continue, albeit at a slower pace than in previous decades. The country's aging population and rising labor costs pose challenges to its growth model. However, China's continued investment in education, technology, and innovation is expected to drive future growth. As China's economy matures, it is transitioning from a low-cost manufacturing hub to a more innovation-driven economy. The country is investing heavily in research and development, particularly in areas like artificial intelligence, renewable energy, and biotechnology. This shift towards innovation is likely to create new opportunities for global collaboration and competition. China's growing economic and technological prowess has led some observers to predict that it will eventually overtake the United States as the world's leading economic power. While such projections are inherently uncertain, it is clear that China's rise will continue to reshape the global economic landscape for decades to come. In 2022, China's import and export budget reached approximately $6 trillion, highlighting its critical role in global trade. With a GDP of over $17 trillion, China remains the second-largest economy in the world, contributing significantly to global economic dynamics. Section 7. Navigating Interdependence, a new era of global economics. China's economic rise has ushered in a new era of global interdependence. The world is now more interconnected than ever before, with China, the European Union, and the USA playing pivotal roles in global trade, investment, and finance. This interdependence presents both opportunities and challenges for countries around the world. On the one hand, China's economic growth has created enormous opportunities for businesses and consumers worldwide. Its vast market offers tremendous potential for exports, while its low-cost manufacturing base has made a wide range of goods more affordable. China's investments in infrastructure and technology are also creating new opportunities for collaboration and development. On the other hand, China's economic dominance has also raised concerns about over-reliance, unfair trade practices, and geopolitical competition. In 2022, China's import and export budget exceeded $6 trillion, and its GDP reached approximately $17.7 trillion, making it the second-largest economy in the world. Navigating this complex and evolving relationship will require careful diplomacy, economic statecraft, and a commitment to international cooperation, especially among major players like the EU and the USA. The world's future prosperity and stability may well depend on our ability to manage this delicate balance among these economic giants.